How long have you been investing?
40 years. I bought my first stock when I was 15 years old. My dad helped me do it. He was a successful lawyer, but was a long-time investor in his spare time. This was back in the day when people had stockbrokers and paid 1% commissions on trades. For my dad, research meant subscribing to Forbes magazine. It was a different world. In my teens, I had a paper route, so I had a steady source of income. My dad knew I was interested in the stock market, so one day he made me a proposition. We would look through Value Line together and find a stock to buy. He opened a brokerage account in my name, and he would pay for the stock, and I would pay him back over time, kind of installment plan. He recommended that we buy a conglomerate called Gulf and Western. It was $12 a share, so we bought 100 shares. I paid him $30 a week for the next 40 weeks. After a year and a half, Gulf and Western hit $18 a share, so we sold it and rolled the money into 100 shares of utility called Central Maine Power. I always had a pretty tense relationship with my dad, but we had a bond, so to speak, with the stock market. When I started the Crabtree portfolio in 2009, my dad was the first one to call on the phone and offer to invest. My dad passed away in 2015.
How long have you been investing professionally?
Well, by the time I got to college, I'd accumulated about $5,000 in 2 different stocks, but that all got spent on tuition. I majored in math in college. I graduated, and I worked as a computer programmer in the late 1980s. But I always kind of figured I'd end up doing something related to the stock market. So I got an MBA in the early 1990s, and in 1993 I went to work as a tech analyst at a boutique investment bank in Austin, Texas. Austin already was home to Dell, and IBM and Advanced Micro Devices were there, and the whole town was ready to take off. It was an amazing time. I worked on the sell side for about 5 years, analyzing telecom equipment and enterprise software firms. In 1998, I moved to the buy side, just in time for the dot-com bubble. In 1999 alone, I attended 75 IPO roadshows. I met a lot of people who were really rich for what turned out to be a really short period of time. But I survived the bursting of that bubble, and in 2000 I became co-manager of a small cap growth mutual fund in Milwaukee, Wisconsin. And I've been a portfolio manager ever since.
What's the Crabtree Technology portfolio and Covestor all about?
Well, you've heard of an elevator pitch, right? Well, for Crabtree, I have what I call the revolving door pitch. It's even shorter than an elevator pitch. Crabtree Technology portfolio is a tech fund run quantitatively. With a sector fund, one that focuses on a particular sector like technology or healthcare or energy, utilities, the assumption is that the portfolio manager and the analysts are experts in that field, and they're applying this domain expertise to generate investment returns. For example, in technology, we hear all the time about gigahertz this, nanometer that, and buzzwords like cloud computing. Because I have a background in math and programming and an interest in computers in general, I'm pretty well versed in this kind of lingo. But my investing experience, is that it's very easy and even seductive to think that this specialized knowledge is some kind of advantage. Some time ago, I came to believe firmly that it isn't. I think people with specialized knowledge often overestimate the value of that knowledge, particularly in terms of investing. So for Crabtree, I build and maintain the portfolio by strictly looking at the numbers. For example, no company gets into the portfolio without having positive operating cash flow over its most recent 4 quarters. And I use data in this way to search for the 3 things that I value most: cash flow, steady or increasing market share, and a history of execution in a company's business model.
How did you arrive at your strategy?
Well, it's really just the sum total of all my investing experience, the knowledge gained from the many winners and the many losers I've had over the years. Starting in the year 2000, I began screening for companies with certain characteristics, like operating cash flow, or meeting or exceeding Wall Street earnings expectations. I quickly settled on about 5 factors like this, and I began tracking how well this kind of robotic portfolio performed over the subsequent 3 and 6 month periods. And I've been doing that kind of research work steadily for the last 16 years, and for the last 8 years, it's been the basis of the Crabtree Technology portfolio that is on Covestor. And because of my experience, I know the value of having a process that steadily generates investing ideas. To do what we do, you can't just pick stocks individually. You have to have a process. I like to say that the plural of stock picking is not portfolio management. Stock picking just doesn't scale in that same way. My strategy was also heavily influenced by the book Fooled by Randomness by Nassim Nicholas Taleb. Taleb's insights about how we value and interpret information were key to my decision to base my stock selection choices strictly on data and to ignore all the noise that surrounds investors every day.